G'day guys, welcome back to another market update, which hopefully is starting to balance a little bit of the media out for you. We're getting back to these now. We did a lot of them in 2020, the last time people were scared, and a lot in 2018, the last time before that people were scared, and 2017. People are always a bit scared of something or other. But in today's video, we just wanted to bring some of the things, positive and negative, that we've heard about the economy, about wages, about inflation, about what's going on right now property-wise Australia. So kick things off, Simey, what do you think's been going on, and what have you heard in the last month that's been positive?
I'll tell you, the first thing I want to start with for today's market update is there's just been a broad variety of different things coming up on my YouTube feed and my emails, lots of different headlines. And what I have realized is that there is a lot of doom and gloom in the headline, but once you actually click into the article or you actually watch the video and listen to the information that's inside of it, it's sort of a different situation. And that's sort of what we've noticed from tracking some of the numbers, some of the data from CoreLogic, SQM, Simon Priestley, Phil Anderson, all of these different people. So I think in markets like these, the best thing to do is just don't take the headline and believe what you read. Actually read the full article, listen to the full video, get the detailed information, because it paints a very interesting picture. Now, the first thing that I've realized is what we've talked about a lot is just that Australia isn't one big market. There is certainly markets within markets. And when you look at the split between these different regions of Australia, it tells you a completely different story at the moment. Now, Sydney and Melbourne have been feeling it. They've started to decline month on month for a while now. But when you look at some of the other cities around Australia, they've actually continued to move in a bit more of a positive direction. There's still demand there. There's still affordable property prices. Rental yields are a lot stronger. Vacancy rates are completely lowest they've been in 16 years. So, there's a lot of cool things happening out there.
It's actually wild. I've been bumping into, for some reason, 3 or 4 big YouTubers in the last few months and just picking their brain. And they're like, Ben, if you really want to blow up in the media, you just take the most sensationalist thing that people are feeling, and then you just write text towards that, and then YouTube will benefit. And it's the first time in a long time, actually, I've been I want to subscribe to YouTube so that I stop seeing this bullshit showing up in my feed around what the average person's consuming right now. But I think you're really right, man. It's a tale of two different things going on right now, because the only negative thing that I can personally find right now is predictions about something negative happening that hasn't yet happened.
Yeah.
But when you look at all of the fundamental data points, they're all phenomenal. And so there are some negatives that we'll talk about here, but unfortunately, I just couldn't find many when I looked at the Reserve Bank this month, CoreLogic this month, CBA this month, outside of sentiment's pretty shit, interest rates are going up, and we most likely will see a pause because of that, and in some markets a bit of a retracement. They're not saying though that market that's retracing already went up 120% in the last 8 years, you know what I mean?
Yeah, it's sort of recorrecting and normalizing is what you would say. And that's what Phil Anderson was saying about the interest rate rises at the moment as well. I talked to a lot of people that appear to have been forecasting their interest rates on a 0 to 2% interest rate. Now, you taught me when I first started learning about property investing to forecast your interest rates on at least 5%, even up to 7%. So now that they're starting to creep back up, which was inevitable, they can't hold them at 0% forever. And the RBA's constantly adjusted interest rates depending on the economy. So one of the things that we've sort of realized and read about is that, this inflation adjustment is to really slow down the inflation that's occurring right now, because it is rife. It's really happening, and the cost of living is going up. And this is one of the extremely negative things that we've been reading about, the inflation that's occurring, the cost of living that is going up with petrol prices, the construction industry. You've got electricity and energy bills going up a little bit as well. And this does hurt, when your expenses are getting shot a little bit and when your expenses are rising a little bit, it doesn't feel good, right?
It's so funny, man. Yesterday I was talking to one of our clients who grew up in Argentina. He's just bought his second property in Brisbane. Legend. He works at Red Bull, and he said for the first time in 10 years, they've had to put the price of a Red Bull can up. And it's like, because the cost of driving it,
Yep.
flying it, producing it, and even the aluminium's all gone up. And I'm like, he didn't want to do it, and they've had to go talk to like Coles and Woolies, and like, this is a real thing. It's not this like fairy dust like concept. Like, the real cost of certain goods is going up. But if you look at Australia and many parts of the world, we haven't seen wages adjust, or the cost of trades in Brisbane has been flat for like 15 years.
Exactly.
And so it's like they're just catching up to where they should be relative to house prices.
Exactly. Now, one of the interesting things that I wanted to talk about in today's market update is just the information that we've been getting from SQM about the vacancy rates. And this is a positive and a negative, because it's a positive for property owners and property investors that are renting properties out. But it's really challenging for people that are renting. Obviously their cost of living is going up. The rents are expected to go through the roof. There's a number of people, CBA, CoreLogic, Propertyology, that are all anticipating rental prices to increase quite dramatically over the next couple of years. Somewhere between $100 to potentially $200 per week is what the expectations are. So that's huge. Like, that is a huge increase in rental returns, and it's going to hurt a lot of those renters and sort of force people to move around into maybe more affordable areas. One of the things that we've noticed from these rental increases that we're experiencing in Brisbane right now is it actually supports the gentrification of some suburbs as well, because people that used to be able to rent a property for $300, $350 per week, that was achievable. But now those rents are getting to $400, $450, $500 per week. It really hurts those weekly or monthly living expenses, and some of those people will no longer be able to afford it, and they'll be forced to move into a different region, a different location, a different, more affordable property.
Completely. Like, I was speaking to one of our clients, Gus, who bought a couple of houses with us last year, and he's building a couple of granny flats on them at the moment. He's also just introduced his mum, who's sold a house in Byron Bay, and she's looking to do like 5 or maybe 10 properties this year with us as well. She's like me, a bit one of those buyers that likes to buy at the bottom. But he was saying that across his properties, the estimate that we gave him at the start versus what it's going to be now, he's looking at getting about an extra $800 a week of rent from like the time that we bought to the time that these projects complete, which is $40,000 a year of extra passive income than he was expecting. Like, this is very, very real for those investors out there that have taken advantage of it.
And it's really because the vacancy rates are so low. Now, the Australian vacancy rate has just hit a 16-year low. When we were doing our market updates over the last couple of years, we kept seeing these interest rates come lower and lower and lower. And unfortunately, there hasn't been much new supply come to the market. And it is just getting worse and worse now that the borders are open back up, and tourists, immigrants, and students are coming back and filling in those inner city apartments. It's really changed the vacancy rate. So if you're looking at the Australian average right now, it's sitting at 1%.
I've never seen it that low.
We forecast and try and find suburbs that have a vacancy rate of less than 2%, because that indicates an undersupply of rental properties. And below 1% is chronically undersupplied. And that's where every single area of Australia is. Sydney sitting at 1.5, so dramatically retraced now that the inner city apartments are starting to be taken up. Melbourne sitting at 1.7%. Brisbane sitting at a whopping low 0.7% at the moment. And I couldn't believe it, Perth at 0.6 and Adelaide at 0.3 as well. So, because these vacancy rates have been so low for such a long time now, this is why property investors, property owners are starting to increase their rents, because the demand is so much higher than the supply at the moment.
The problem with the supply and demand, position, and I could feel exactly when it started. Back in 2016, APRA stepped in.
Yeah.
Because Sydney and Melbourne had gone through a hell of a boom by that point already, and they continued to until about 2018, halfway through. And at that time, they went, well, the economy isn't in a strong enough position at that time to increase interest rates like they're doing now. Like, the economy is actually strong. That's why they're putting rates up. It can handle a little bit of an adjustment, but effectively they made access to money really hard for people like you guys and us. And it is still harder than it has been historically to borrow money right now. Like, for the last 5 years, they've been, even though interest rates have been at 2%, they've been checking them out at 6% for you when they lend you money. So they've been very, very conservative, and they've not been supportive of super funds or business people or sole traders. Like, they've cut a lot of people, investors, out of the marketplace. They've really focused on mums and dads. But now we're in a position where it wasn't just the mums and dads like you guys and us that could, not get money. It was all of the developers. And then the cost of development with the state government, Australian government, and local councils meant that they were taking such a big piece of the pie with taxes and infrastructure fees that developing just hasn't been profitable. And so there's this massive chronically undersupplied position in some markets of Australia, parts of Southeast Queensland in particular, where there's this undersupply. There's almost 1,000 people a fortnight moving up at the moment, and there's just nowhere for people to go. And you can't turn on the development tap in a day. It takes years and years and years for the banks to lend the money to get this stuff out. So I can't see this issue going away. And the government's committed to 200,000 new people this year and next year until we get to, 60 million Australians. Like, it's just not going to stop at the moment unless they do something crazy.
Which maybe they will, but only time will tell there.
They definitely will. It's a matter of when.
Exactly. Now, they actually also, updated their forecast for the rest of this year as well. SQM did. Now that they've got more feedback from APRA and the RBA, they know where interest rates are sort of trending now. They were kind of forecasting late last year in late 2021 without sort of knowing when or how quickly the RBA was going to rise rates. But now they do, and, they've sort of indicated that they believe it will be their scenario 4, which they predicted back in November of 2022, which 2021, which looks like Brisbane increasing somewhere between about 3 to potentially 6% in 2022. So really positive growth still up here. Like, when I forecast my long-term projections, I'm looking at about a 5 to 6% rate long-term. So sort of sitting there, which is great. Now, Sydney and Melbourne, different stages of their real estate cycle, different positions in the current market right now. And they expect Sydney property prices to go backwards by -2% to potentially -7%. And Melbourne even worse than that, back by at least -3% to potentially -8%. And that's what we're seeing down there at the moment as well. We can clearly see those property prices coming backwards. When you look at the CoreLogic indices for May, it indicated that Sydney went back 1%, but it's still up 10% over the last 12 months. Melbourne went back 0.7%, and it's up still 5.8 over the 12 months. And Brisbane still moving in a positive direction, up 0.8% and still up 27% over the last 12 months. So as you start to pick apart the different markets throughout Australia, the different capital cities through Australia, it tells you a different story. It clearly indicates that markets are in different stages of their real estate cycles right now.
I love that, man. I think there's even pockets of Brisbane, for example, within 5Ks of the city that have averaged 8 to 12% a year for the last 10 years per annum. So they've doubled in value. And then you can be literally 12Ks down the road, and I know suburbs that have done 2.1% per year for the last 12 years straight, which means when you put into account inflation, they are still cheaper to buy than they were 12 years ago. And so when I think about this market, I get excited.
Yeah.
I can't help it. Like, I love a market where our client is not competing with 60 people on offers every weekend. I love a market where the average person that doesn't see this, because only a couple of thousand people might even watch this video, just because you're getting it, guys, doesn't mean that your neighbor is or anybody around you is. And so with this information from the major thought leaders and analysts and economists in Australia, you can make much, much better decisions. I have no idea what's going to happen in the next 12 to 18 months. I personally, even though it might be like negative in a way for our business or for my property short term, I hope that this market lasts a little bit longer so you guys can take advantage of it and you can get great deals like you could at the start of COVID. And I see, from today, the media hanging onto this for as long as they can. I do see Sydney and Melbourne prices coming down, and so does every other bank in Australia. Although what's weird is, like, some of the bigger analysts that I follow, like your Simon Priestleys, like your Phil Andersons, even like your CBA banks, they're not necessarily seeing things in some markets like Perth, Adelaide and Brisbane as well, like really having that much of an effect over the next 2 years. It might go up and it might come back, but relatively speaking, it's more of a flatlining period where certain properties will come on discount because this guy's freaking out for no reason versus the overall market retracing. Some of these numbers I'm seeing online are insane.
Yeah. And what this has led to is a buyer's market. Late 2020, 2021, 100% a seller's market, and they were getting amazing returns, but the power is back in our hands, and we're able to negotiate a lot better. We're able to be a bit more patient with the deals, and rather than, negotiating over a 24-hour period, we're now negotiating over a 4 to 7 day period, which, it just feels a lot better. And this buying opportunity won't last forever. It will probably only last, as you said, maybe 12 to 18 months, but only time will tell there, because what's expected and what a lot of economists and analysts are talking about right now is they're rising interest rates to hedge against inflation, and they're expected to rise them quite sharp over the next 12 months up until June 2023. And then what a number of people believe is the interest rates will actually start coming backwards. Now, they're certainly not talking about this in the major media outlets and not talking about what is expected to happen in the future, but they see these interest rates starting to come back, which will obviously stimulate buyer demand again, may move back into more of a seller's market. You will probably be competing with a lot of people in the near-term future as well. And so that's why we look at a market like right now and go, okay, well, we're not 100% sure what's going to happen over the next 3, 6, 12, maybe 18 months. But moving forward, based on hundreds of years worth of data, indicates that we could be moving into a really, really good market. And that's why, right now looks like a great buying opportunity for those people that are in a safe position, that are in a good financial situation at the moment.
It's interesting, man, because you're so right. Like when I look at what the Reserve Bank, I just love this shit. So I look at like the notes of their meetings and stuff. And then I look at from some of our clients, what like Commonwealth Bank saying to their clients, we're so lucky to get access to this stuff. They send a specialized newsletter out each week to only clients with over $10 million worth of assets. And luckily one of our clients is in that position. And so he forwards me that update that goes to like the 1% of the 1%. And it is like a crystal ball. Like it has been, how accurate has it been in the last 3 years?
Yeah, we knew these interest rates were going to come up like this about
2020, they were telling them.
2 years ago. So we're so far ahead of the curve.
So what CBA and the Reserve Bank were originally saying was, we'll just like tapered inflation, they were calling it, where it's like, we'll just increase by, 0.25% this month, and then we'll see how things are, and then we'll increase it when we need to again, and we'll slowly do this until rates are up 1 to 2%. Now they just got the inflation figures back for the last quarter, and they went, fuck, we've missed it again because we had an election and we wanted to get re-elected, and now it's like, boom, handbrake on. They're going to increase rates without a doubt by 0.5% for at least the next 3 months in a row.
Yep.
They're going to do it really, really quickly, which is like aggressively tapering inflation now. And then as soon as they get it under control, if you look at the notes from the Reserve Bank, they're saying that by the middle of next year, rates will be coming back down again. And CBA and every other major bank in Australia is saying this. They're saying this to their top mortgage brokers. But then what the Reserve Bank's saying behind closed doors to like the heads of banking is, we are doing this because we have to stop inflation and get it into a normal range and spending. And by like the cost of our houses going up and our rents going up, it will stop spending for a little while. And then they're actually setting the expectations. This is insane to me. I don't believe it, but this is their note saying we could be at 1 to 2% retail rates by 2024 again. We could be at negative rates in Australia, so below what we were paying last year, which means retail rates of 1 to 2.5% again by the end of 2024. And if that happens, all of the analysts, including the major banks, are expecting house prices to go up at least 30 to 40% again between now and the top of 2026. So when Simon and I look, I couldn't care less what happens in a year.
No.
I don't even look at what happens in 5. When I'm buying for 15 to 30 years or to hold for life and to pass it on to my kids. But man, this short-term stuff, if you look past the media, looks so interesting at the moment. So one of the things that I've been looking at is like where to put my money at different stages of the cycle, because I'm starting to look at, like, I understand business and I understand property, but I'm starting to personally look at like diversifying. Everyone smart that I know is like, don't diversify. That's where you get yourself into trouble. But I'm like slowly taking the same approach to stocks that I've taken to property, knowing instead of spending my money and learning with it this time, I'm just going to read about it.
Yeah,
and
learn
then
and spend.
Over 2-3 years, I'll like know 1% and I'll start like dabbling. But you know what Ray Dalio is saying, you know, from reading every part of his work in the last 4 or 5 months that I could, is property has been an incredible hedge against inflation for the last 100 years. Reason being, it is not as liquid, so we're not seeing people run out of the markets. And, you know, let's say that Red Bull's publicly traded and their cost of production just went up by 50% because the aluminium prices, what they're putting in the drink, and how expensive it is to fly or drive it around. So therefore their margin has been crept. It's not like Red Bull's stock price just went down 50%. It went down because it's like
Their
future
profits have gone
profitability
down.
just
Yeah.
got annihilated.
Yeah.
Where property is the opposite. Our rents are going up at the moment with inflation. And what CBA is saying to the $10 million plus investors is like, wages are going to go up at such a rate over the next year and a half, and rents are going to go up, and wages. And with a 10% decline in Sydney and Melbourne over that period, they reckon the market will be so well reset that everywhere in Australia will look affordable again and will be back off to the races. Now, that's CBA saying this stuff, but they're not saying it in the Financial Review. They're saying it to their like high net worth clients to make sure that those people understand what's going
coming.
and they have a competitive advantage to take advantage of it now.
It's so interesting when you start understanding all of this stuff, and it really leads to the fact that just, you know, the very minority of the population gets this inside information. They can make smarter decisions, but then the majority of the population that is following the Financial Review or, you know, ABC News or whatever it might be, you know, they're getting different information and making decisions based off that stuff as well. And it's like, you can just see how the divide gets wider and wider and wider. But look, at least we're able to provide this information to our viewers and the people that follow our YouTube channel. Like, I have no idea what's going to happen over the next 3, 6, 12, 18 months, even longer term. But I know over the long term, 10, 15 years, there's going to be a lot of opportunity out there. And, you know, if I just sit here and do nothing, I'm going to be in the same position in 5, 10, 15 years time from now. But if I can, you know, do my risk management, have a look and analyze my situation and go, okay, you know, personally, I feel confident to do something right now. There's just great buying opportunities out there. So we'll see what happens, eh?
Yeah. And I mean, you know, personally, I just bought a property and settled on it in the last month. And I personally shat myself doing it.
Yep.
I felt sick getting into the debt. I was questioning it. Was it the right time? Am I doing the right thing? The exact same questions I asked in 2011 after the GFC, the exact same questions I asked in the first 6 to 12 months of COVID when I was buying. And it was like, it's hard to go against the herd because like our DNA for 100,000 years is built to be safe and protective and, you know,
and follow the crowd.
They know better. But I'm like, like Warren Buffett's just spent like 75% of his savings in the last couple of months. And I'm like, he doesn't do that unless he thinks it's getting close to a bottom.
Exactly.
But there's also negatives going on. So what are some of the negatives that are, you know, going around outside of the media at the moment, obviously?
Yeah, look, I can't read your writing here, but no, we'll just have inflation is high, like negative sentiment, interest rates rose, possible.
Inflation is high at the moment, which means the real returns are being washed out. So let's say that the property price goes up 10% this year in Brisbane, which is what it's on track to do at the moment. It's still going up 1% almost every month right now. If inflation is 7%, then your real return was only 3%. So, you know, like from that perspective, inflation isn't a good thing for any asset class if it runs for too long.
Yeah.
It's a great thing as a property investor because if it blows your price up and your rent up, but then the value of your debt goes down because wages go up.
Yeah.
It means that like on paper and longer term, you're wealthier and in a safer position.
Yeah, and I think like one of the negative things that I've been hearing is just the sentiment. Like everybody is fearful at the moment. You know, when I go into the coffee shop, when I go to the gym, when I go to these different social gatherings and things like that, a lot of people are bullish because they're like, oh, I can't wait for this crash because I'm going to take advantage of it in 12 months time or something. Or so everybody is quite fearful at the moment. And when every single person that you talk with, your friends, your colleagues, your aunties, your uncles, your parents, your mentors, your barista, like everybody is feeling it. It feels so real to every single person. And then when you look at your superannuation and it's come back 10 to 30%, when you look at your stock portfolio, that's come back 20 to 30%, that takes a real hit to everybody's self-esteem and ego because they feel as though their net worth is coming backwards. And then you look at people in Sydney and Melbourne and their property prices is coming back slowly at the moment as well. There's just a clear case to say why people are feeling the way that they're feeling. But then when you look at the underlying fundamentals, how much cash people have in the banks, how much, you know, additional savings for the coming interest rate rises people have there, how many people actually already own their properties completely outright. There's a big variety. You know, there's people that are in really solid positions, there's people that are in safe positions, and there's a small portion of the population that are in riskier situations at the moment.
Completely. I think that's so important, man. Like, it's funny how people are like, I just can't wait for it to come back. And I'm like, crypto's down 80%.
It's come back.
Like, every tech stock in the US went down at the same time, and you can buy Apple for under $200. Like, it's come back 50%. The stock market's come back 27.5% this year. In America, 10% in Australia. You know, the thing about the property thing, right? And what I've learned about this over the last two, like 2018 and 2020 was identical. To me, it was sentiment driven, not fundamental, like cycle driven. And so like, this is the third time I've observed it. It's the fourth time I've been through it because in 2011 was the same, but I was just too much of a dumbass, naive guy to notice what was going on. I was like, I'm getting financially free, man. Get out of my way. But what I've noticed about stocks, right, and crypto is the market feels shit and then the price is immediately shit.
Yeah.
And then it's like the market continues to feel shit, but the price starts to steadily improve over time. Then the price is like back up to where it was, and then the market feels good, and then they all jump back in. With property, right, you see Sydney declining by 1% last month on average, and 1.8% in the last 2 months, and Melbourne dropping by 1% over the same period. And you go, well, it's only dropped by 1.8%. It's like, if you're a buyer right now in Sydney and Melbourne, I can guarantee there's properties right now that you can get for 10, maybe 50% below where you could have in December last year. And you could get the property next door at the exact price that you paid in December last year right now as well. And so it'll show up in a year's time that Sydney went down 10% or whatever, 7%, 15%. And then as soon as interest rates pop back down, it'll close the gap again. But right now, and what I noticed in the first 3 to 4 months of COVID, when the fear was the worst, that was when the buying opportunity came. It showed up in the numbers a year later, but by the time the 10% showed up, prices were already back to where they were pre-COVID. And so it's something that I've learned, like property data takes longer to show up, but the property discounts are like
already there.
And the problem for us in COVID was by the time a lot of people came out, like over 500 people came out in the first half of that year going, I love this. And those same people are coming out right now to us again.
Yeah.
But it's like, by the time people showed up in late 2020 and mid 2021 going, I want that discount, the market had already gone up from that 15% discount to then by 30%. And I'm like, well, the discount's not gone. And by the way, this property had 130 offers on it last weekend.
Yeah.
And it sold for 150 grand above asking price. And it's like, I just want people to understand this, that fear will turn into excitement. And then the fundamentals will be realized. And according to every analyst we follow, there's possibly between 30 to 70%. Even some of them are saying 100% upside between now and the Olympics in Brisbane. What, I don't know. I just wish I could shake everyone and go, fuck, like 10 years from now, you're going to regret this 10% discount you might buy for the next 3 months.
And this is what I've been talking to a lot of people about in strategy sessions, the fact that, you know, right now is a great buying opportunity, and certain markets in Australia may sit flat, may decline a tiny little bit, may even go forward a tiny little bit. But it is a good buying opportunity. And as you say, you can almost price in those declines on your way in right now as to what could potentially come. But what I know is this historic 18.6 year real estate cycle, that confidence will come back and people will be overly confident at the wrong time in the cycle. So what we need to do right now is actually understand how the economy works, actually understand how the Australian property market works and where different markets are at right now in their individual real estate cycles, so that you can capitalize right now. Because for a lot of people that are sitting on the fence right now going, I'm going to wait for it to decline, I'll buy in 6, 12 months, 2 years from now to try and time the market and try and time the bottom, they will likely miss out on the bottom, the true bottom, and they will feel confidence and they will come back and purchase a property at some point. And by that point in time, it could be too late.
You know, I don't want anyone to think like I'm a property spruiker or even like super. I'm probably like the most negative person that's pro property in property. Like what I want people to get out of this is like, I don't know why I feel confident when everyone else feels shit. And I don't know why I feel shit when everyone else is feeling really good. It's just a part of my nature. Like last year, when prices went up 30% in every major market in Australia, I was like, this is fucked. Like, this is not good for anyone next year.
No.
Because I've seen that happen 3 other times and I know what happens, and it's like excitement turns into fear, fear turns into excitement. And I want people to get that Simon and I don't mind, like I said to everyone on camera in 2020 and 18, if you just wait till everyone else feels confident, that's completely cool. And that's actually the smartest thing most people can do. But for that small number of people that like a discount, that for some reason like me feel better when things are worse, and that look at the fundamentals of incomes being stronger than they've been in the last 10 years, inflation being one of the only, property outside of commodities is one of only 2 things in the entire world that does good during inflationary periods. Like unemployment rates are the lowest that they've been in, I don't know, I saw something that was like between 15 and 30 years. They're below 4% in Australia right now. Vacancy rates are the lowest. Cash in the bank is the highest that it's been. If the media would have you believe that everyone has got to work for 10 years to pay off their property, the average debt or property value debt to income ratio in Australia right now, based on like numbers, is 4.5 years or 4.4 years of the income to paying off the debt. Over 30 to 35% of Australians own their properties debt-free. Another 30 to 35% have an LVR below 50%, which means they own 50% of their property. There's a small number of people that have over-leveraged, but because the banks for the last 3 years have been wanting bloody 20%, no one's sitting at 95% right now. And as Warren Buffett said, because I was reading him big time on the weekend for a few hours, and Phil said as well this week, we're not even close to all in.
No.
Apple has 200 billion in the bank.
Yep.
Like almost all of the Fortune 500 companies are sitting on massive cash reserves. How many people do you know, whether they're first timers or second timers, sitting on 50 to 200 grand cash with 50 to 500 grand equity right now from the last 5 years? But because it's been so bumpy, like 16, 17, 18, 19, 20, 21, 22, it's like it's been so bumpy, no one's been able to just go.
Yeah.
And so like, it's very exciting to me. It's very scary as well.
Yeah, it is scary. When everyone feels like that, it feels bad. But, you know, there's good things as well. And that's what I think is important to recognize, is like, you can't just focus on the negative and believe 100% of that, because there is positive information and news out there right now. It's a beautiful thing about having all of these different resources, having so many years of recording this data now that we can kind of cross-check what assets do well in inflationary periods. You know, how does Sydney and Melbourne versus Brisbane and Perth perform during the first versus second half of the real estate cycle? We've got all of that information to lean on. And regardless of what happens, we know property prices are going to continue moving forward over the longer period of time because, as we talked about, the Aussie government wants to get the Australian population to 60 million people. There's already an undersupply of properties. What happens is more and more and more people come in here, every single one of them wanting to put a safe roof over their head.
You know, it's so interesting, man. We worked with a great client this week. He's just signed up. His ex-defense force, did a couple of tours in Iraq and stuff, and just a really nice guy. But he brought all of this information. Like, he's a property geek like me and Simon, and he overlaid military versus the 18.6-year cycle. And we looked at it together, and I didn't even realize the stuff, you know, because obviously they all talk to each other and he knows what's coming. In terms of like defense spending, there's about $36 billion going into defense over the next 20 years. They basically want to put Australia in a position where every single aircraft from America and Europe and India and Japan can land on Australian soils and be based here at any point that they need to, which he said to me is a big flex. But either way, it's money, it's jobs, it's houses. And then on top of that, he was looking at West Brisbane, which is one of the parts that's cheaper to buy than it was 12 years ago now in Brisbane. And he's like, the base out there is going through an upgrade. At the moment, it can fit about 8 Hercules.
Okay.
They want it to fit 100 to 150 Hercules planes.
Wow.
They're talking about the population in that particular area going from 190,000 people to 413 before the Olympics.
Wow.
Like, they're talking about the first fast rail going from there to the city. If you look at the private development in Brisbane, we've got more than $10 billion of private projects occurring right now that'll complete in the next 4 years. Got the underground rail going through, we've got the light rail going through, we've got every road from the sunny coast to the Gold Coast that's a main arterial being redone between now and the Olympics. Sunny coast is getting heavy rail, light rail. The Gold Coast is finishing off its light rail. It's just like 1,000 people almost a week are moving up. It's like, how much more confidence do you need in what's going to occur longer term it's just I've just realized it's never going to feel like the right time.
No, unfortunately it's not.
It's just not.
But look, I think there's a lot of good information, a lot of positive stuff, a fair bit of negative stuff coming out in the media. We will continue bringing the stuff that we're reading. You know, it's very consistent at the moment. Like, daily I'm getting a new article from one avenue or another, all different opinions, different perspectives, looking at different parts of the economy. And I love just looking at the different opinions, because when you don't know what's coming, you look at all of these different ideas and then it helps you formulate your own opinion, and you know, then you can find the confidence that you need to keep smashing your goals and working towards, you know, achieving financial freedom, replacing an income for life, and you know, not necessarily having to worry about, you know, good environments, bad environments. Like, if you can become financially free, like, imagine having 3 properties owned completely outright, paying you $100,000 worth of passive income for life. Like, you wouldn't need to worry about interest rate rises. You wouldn't need to worry about, you know, any of these different things happening. And that's such a pulling force to me. It's like, that is such a empowering opportunity to work towards long term.
I love that, man. Like, when I look at my future, I'm like, who do I want to be? Like, what type of character do I want to have? Like, what type of life do I want? What type of passive income do I want? And I wrote this on one of our Instagram quotes in the last week, like, just as a me one. It's like, the fear that I have around not becoming the best version of myself in this lifetime, not being able to go to my kids' sports carnivals, not having choices with the work that I do, not being able to help people, not being able to like hang with my family and travel and surf and train is so more severe in my mind, or the thought of being on the pension, than buying a property, freaking out about it for 3 months until I forget that I even own it. You know what I mean? Because that's what happens.
Yeah.
Like, and I want people to recognize, like, whether it's one really high quality house that you sell in 30 years for historically 2, maybe 3 times what you paid for it, or whether, like Simon and I, you want to set up a 3-property strategy where it's like simply buy some good stuff, pay off the debt using some advanced strategies that smart people use, and then choose what you want to do after that in terms of the choices in your life. Like ultimately, we've got to remember that property is just one of the vehicles to get to freedom. And the reason we're doing freedom is choices to become who you're supposed to be, to spend the time with the people you care about. And so getting ahead of the information, I hope, enables you to get confidence, to take matters into your own hands, to save that money, to safely invest, and make sure you keep the buffers in place. Like, we're not advocating go all in. That is the last thing we're talking about. Safely, one step at a time over a 20-year period, get what you deserve and become who you're supposed to be off the back of that. And
Absolutely.
we hope this information really helps fill in some of those confidence gaps, because like this system is set up to keep people small and to keep people broke. And I can guarantee the Ray Dalios and the Warren Buffetts, as much as they love helping people, absolutely love a market where people have just...
We didn't create the market. We didn't create the system. You got to, work within the bounds of that system. And, it's going to happen regardless. It's going to
be ups and downs, right?
Yeah. It's going to happen. It's out of our control. It's like, which side of the equation do you want to be on? Because that's a choice. We can choose to run and hide. What was the thing that Jack posted the other day? Fear is, fear is, I can't even remember it.
It was so good too.
But it was like, face our fears and move forward versus just retreating. So it's just like, who do you want to be? Do you want to be the person that retreats and life is happening at them? Or do you want to be the person that moves forward through their challenges and life is happening for them? And, that's the type of person that I want. I don't want to be controlled by the external world. I want to just control my own internal world and do what I can do to, operate in the external world. So
I love that so much, bro.
We'll see what happens, man. But thanks heaps for sharing all this information with us today. For anybody out there who is wanting to take advantage of this amazing buying opportunity out there, we are helping a small number of investors purchase properties in the Brisbane market every single month. Now, what we do offer everybody is a free one-on-one strategy session. You can access that via our website, pumpedonproperty.com. Follow the free strategy session links to book in a call with me or Ben, where we'll talk about exactly where you're at right now, where you want to be in the long-term future, and how we can get financially free. We'll also talk about some of the roadblocks currently holding you back, and then you can take that information and go and smash it yourself, or potentially become one of the small number of clients that we work with each month. But either way, we hope some of this information has built some confidence within you, and hopefully you can, detach from everything that's going on and just go out there and live your best life.
Woo!
That's a wrap.
That's a wrap.
Have a spin. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that.
So nice, eh?
Oh.